Hey, hey everyone. Fast live update for this week. Really not too much going on. Still kind of a consolidation mode. Still the same patterns as we had last week. Basically from that big correction that we had, which is pretty normal, which is pretty actually normal for the big corrections, and it does take time for market to digest things like that. So basically, nothing to be too surprised with. A lot of talking right now about the question whether the crypto cycle is over, whether what we saw on Friday that there is two sides to it basically. One side says that it's broken. Another side says it's actually the signal for extended cycle. We've been talking about extended cycle. It's one of our posts actually. This graph is on one of our posts, and this graph shows that we're like around August when we did this analysis and when we published this chart. We were predicting that the cycle would be extended at least by double to what we saw in 2017 and 2021, two major benchmark cycles right now, which were pretty big already in terms of market volume, and in that sense they are they representative of the current price action as well. So we basically use them as benchmarks. Not too much, unfortunately, but something to relate to. So originally we had about 12-month cycles, 9 to 12-month cycles in 17 and 21 accordingly. And the August data was pretty optimistic, and it was showing the extension, but extension was predicted to be around 12 months, 10 to 12 months. According on the current data, based on the current correction which occurred, we clearly have never entered. We have never really entered the Ethereum rally phase, because we could see that we never really took all-time high. We did, but like for a second, but that doesn't really count for taking all-time high. So basically a one touch, not even of the weekly close. So like even the weekly close was below the previous time high. So that can't be really considered Ethereum rally. Like the price did rally from the summer lows, from the April lows, from the spring lows, but through the summer. But it barely touched the previous all-time high. So in order to be considered a full-blown rally, that's really not enough. So we really never entered in the Ethereum rally phase, which we were expecting to last anywhere from June to November. So that basically could be counted that we semi-entered the phase. We may have entered it, but we never really completed that price action. And in order to complete it, this move seriously broke down the price action. We are in the recovery phase, clearly, but in order for me to be assured that we're back into the uptrend, I want let's see where we're on the daily. That's the weekly. I mean, like on the daily, we're still below the regression channel lows. So anywhere like between I wanted to be like for Ethereum, I really need like to be convinced that it's back in at least 4,200. But realistically, I want it back to the all-time highs. I want it back to 4,800, because that's just not the right price action on the all-time high. It was the third touch, and based on the technical indicators that should have been. I mean, even though we had a low here, like that's obviously like a bad price action. So that is weak. That is still pretty weak with being under regression channel, and Ichimokus are still below. So Ethereum is pretty weak. Definitely nothing to be considered a rally right now. Let's see how it's going to perform in the next couple of weeks. We're going to discuss couple things, couple major stories that are going to be influencing all the crypto market in general and Ethereum in particular in the next couple of weeks and months as well. But to complete on the cycle question, I believe that we are somewhere in the in early to mid phase of Ethereum rally. So my thesis is very simple. I think we're in extended cycle. I'm not on the side that the cycle is broken. I'm not on that side that crypto cycle is broken. The popular opinion is on average divided 50-50 right now. Half of people, half of popular influencers believe that the crypto cycle is done, broken, whatever. Wait for 4 years and come back in free. Half of them believe that we're looking at the extended cycle because it's either one or another. Because it's obviously we're like what 20th October right now. We have like 2 and a little months left till the end of the year. It's unrealistic to squish in ETH rally, large caps, Altseason. Like it wouldn't fit. They usually last much longer. So that takes us basically anywhere into the next summer, most likely. So into the summer of 26. We talked about it when we were discussing that in August. We were talking about potentially that type of extension. We were mentioning that as a super mega optimistic scenario, but now it seems to be much way more realistic to play out this way, and it might be time to update that slide. So I'll work on that, and we'll have a new one ready. All right, let's go in a couple things that influence in the market a lot. Last time we talked about the peak indicators in general. 30 key indicators which were taken, only 53% market hit was indicated. I'm not going to go into detail on those. I'm just going to add a bit. So only one critical, 6 warnings. So majority of them in the perfect zone, and that's one big argument for me why we are not overheated, why we're not at the end of the cycle, and why the cycle is not broken, and most likely like 90% probability, 90 to 95% probability, we're just looking at extended cycle, mainly due to institutional adoptions. That's what not was taken into consideration in 2017 to 21, mainly due to institution adoption. We're now into extended cycle. And that's like one of the news that we recently posted on our Twitter account, is that the big part of the institutional approval is the whole story with ETFs approval. And in October, we were expecting 92 ETFs. Like, I mean, not October, but starting October, it was the window. October, November, December was 3 months where we were expecting to have 92 new crypto ETFs approved for 24 different tokens. And some of them had like 95 to 100% approval odds, like XRP and Sol, for example. And there were other top runners as well, like Litecoin, ADA, and Doge, for example, as well. That got delayed due to the government shutdown, because that was one of the areas that considered to be non-essential for obvious reason. And that was one of the departments going on an unplanned vacation. And that's one of the reasons also this, and the other major reason why I believe that government shutdown now starting to come into play. Remember that my stand until that I was like discussing with you in the previous podcasts was that government shutdown is not into play until 2 3 weeks, and right now we're 20 days basically into the government shutdown. So now it's finally starting to influences and starting to weigh in on the general market sentiment, because on average, on the most it ever lasted was 35 days. So we're now starting to approach that critical level where everyone expects resolution. I heard some news today that there is some initial hopes that it might be resolved before the end of the week. I believe on the poly market, I haven't checked actually after that news, but as of last night, the poly market were pretty low for the resolution this week. So I think it's like we might be like a couple weeks away from resolution. But if it won't resolve in the next 2 weeks, if it doesn't resolve until the next end of next week's next week, we would be already basically like 30 something days and approaching the historical highs, and that would weigh even more on the general market sentiment. So that's very important. Government shutdown is starting to be a very important and play much bigger role in the market in general, in price action, and in the risk sentiment, in the market risk sentiment. Um, and as soon as but on the positive side of it, as soon as it's resolved, it would be resulting in, and it will be most likely resolved sooner or later, preferably sooner, but for the market price action at least. But as soon as it resolved, there will be some hopefully accumulated portion of positive news. One of them will be Ethereum, not Ethereum, ETF in general, several different ETFs, 24 tokens, so like 92. So they basically again big reason for cycle extension, because now they're going to be most likely taken to November, December, January, February, taken into account like winter holiday season and everything. So might be delayed further into the next year as well. So that's a big thing that weighing on the overall situation. And the other thing is that due to the government shutdown, we haven't been receiving any economic data. So all the unemployment and other data wasn't coming out. But apparently this Friday we're going to have a CPI report. I'm not sure why we're not getting any other data, but CPI report is coming out. But that's what I read today, and I confirmed it in several sources. So apparently we're going to have a Friday CPI report. And remember that next week we have a Fed meeting on Wednesday. So we're going to be doing a live podcast next week, not on Monday, but on Wednesday. So we catch the Fed meeting live. Um, okay, so the other factor that I believe, and Fed meeting is obviously going to be very important for price action, and today they actually made some announcements and positive guidance. So hopefully it will result in decrease, and there is some talk around perhaps double 0.5 decrease instead of 0.25. So that will be a big, huge positive sign for the market, even though I think the probability of such thing is very, very low, because it's just like they don't have a data. They don't really know. Unless CPI data is extremely good and the economy is dying, I don't think they will do 0.5. I think it will be just a regular 0.25, and they will have hopefully data by the December meeting. Okay, so the other thing that I wanted to show is M2 money supply, global money supply. I have another graph. Unfortunately, I wasn't able to pull it together right away, but for the next time I will have it. But it basically shows the log of Bitcoin growth to global money supply growth. Bitcoin is highly correlated. Bitcoin prices as a risk asset and as an alternative to gold asset, basically a deflationary asset. Its price is highly related, highly tied to the price to the money supply. As and the money supply increases, there is a high correlation with 90-day lag that Bitcoin price increases as well. We could clearly see it in 2017 here. The money supply increase, the money supply trajectory, because it's measured in trillions of dollars, the trajectory of money supply is not as huge as trajectory of Bitcoin, but we see that money supply basically from 17 to now increased from 60 to almost 120, so almost doubled in terms of money supply, mostly due to that COVID increase. But as you could see, it usually lags. So like we usually have the money supply start to increase and before the money supply peaks, but like 90 days, like takes some time, and then we have a Bitcoin price increase, and the same happened here. So in 2017, so there is a very very high correlation between uh, growth in money supply and M2 and then price of Bitcoin, which obviously makes a lot of sense. And it's a risky asset, and that's where the money, basically, a lot of the money, additional liquidity flows in as a hedge of inflationary, uh, as a hedge against inflation, basically. Um, so the same picture, like the same basically idea, just confirmed on that graph as well, and there is also like I haven't seen like the M2 is a more obvious one, but this one I recently saw on some other analyst show, and it actually shows the gold 2020 performance, and since we're in that very aggressive move on gold right now, it's interesting to see that there is also like a lag correlation between gold price peak. You see, like here in 2020, gold peaks and then starts to decrease, and after gold, Bitcoin doesn't move while that happens, and when the gold peaks, then Bitcoin starts to pump. I mean, one cycle is not enough to make any like real uh, decisions about and any like real big forecasts, high probability forecasts, but it gives at least some initial ground and some interesting food for thought. Uh, and a bit and it seems like gold is there at this high point where it might peak out. Um, Another measure which is also interesting and relative is historical performance for um, the Bitcoin, historical monthly performance, and as you could see, the last quarter, October from December, from basically 13, we could see the data historically been very strong months for the Bitcoin. So we're looking at the pretty long range of data, and 20-30% is pretty normal for the October, November, December highs. Um, Another indicator that I also it's basically related to the one above is the it's just a bit different view of it. You could see that when the price peaks, usually in previous cycles, it hits those climatic highs, while now we're kind of still in the normal rate of growth. Yes, it's been a bit of extended what we talked about in the beginning with the cycles, but you can say that it was overheated at any point. Um, so everything below minimum. So it's basically for both Bitcoin and Ethereum, the same picture. So again, that's my basis for the argument that we're not in breakdown zone. We're just basically a normal correction. We're just with a normal correction, and all that I'm showing here basically is a proof of one big concept that we're not broken. We're just correcting, and we're just in we're just in the experience in the extended cycle, and this is mainly due to the institutional adoption first, and second of all, it's due to the fact that rate cutting and quantitative tightening ending coming later this time, and since crypto is very highly tied to M2, to global money supply, and now we're experiencing across the globe the general easing in policies. Now the new prime minister of Japan is talking very positively about easing in as well. I just heard that news today. So that would create a lot of good positive momentum. That should create a lot of positive momentum for crypto, for assets in general, for equity, for crypto specifically, because it's basically uh, when the printer is on, when the rates are low, and perfect condition, basically perfect condition for crypto to rise. So I expect very strong November, December. October might be still bumpy. We're also the risky the biggest risk is tariffs right now. It's like kind of on the back scene right now, but with the meeting with an in-person meeting of Trump and China President Xi approaching very shortly in the beginning of November, that might have some new developments, and hopefully it would also um, resolve nice. And imagine if all of those factors that we discussed today resolve nice, approximately everything is kind of comes together at the same time around beginning mid-November, basically. Hopefully, a government shutdown will be resolved in the next 10 days or so. Then the tariffs would be resolved. Then the decrease. So not even 15th, basically around like 5th, 10th of November, everything should be resolved. And evolve, resolve as expected, combined with new ETF approvals that would come after that. That might result in a very big, great, and historically confirmed end of year, and then we could see, based on how that would be developing, what would be the forecast for the bull market extension, and whether our thesis and whether my thesis about media would confirm. Remember, one of my big thoughts and ideas and the whole thesis about mid-year is that new federal chair appointment is going to happen in May, and it seems like Trump already figured out he is going to appoint, so market is already kind of pricing that in. Um, so that's and he is very positive. He is very like aggressively dovish. So that's going to be very positively playing out basically throughout the next 6 months. Since the signals have just been very firmly provided to the market. I don't think it's played out yet because it's just a bit too far ahead. But starting end of the year, that will be providing a lot of positive outlook, because that will be coming closer and closer. Uh, that's it. That's what I wanted to tell you guys today. My major conclusions are I'm still not trading. I'm still not placing any new market. I'm not allocating any new market. I'm waiting for the levels. If something will change, I'll be posting on Twitter. I'm traveling this week. I will be in Boston at the CDAO Data Science Conference. If any one of you there, please stop by, join me, text me, send me a tweet, or send me a post on LinkedIn. We'll catch up there. Um, Wish you the great week. Trade safe, trade smart. Don't rush into the market. Uh, if if something changes, I'll let you know. But I don't expect any big moves to come this week. I think around the next week, because of the Fed meeting, largely because of the Fed meeting coming, I don't think the market will be making any big moves. I think it will just continue to consolidate, and then hopefully by after that meeting, after the good news, uh, uh, after the expected and kind of priced in decrease already, uh, hopefully with some other positive things coming as we discussed today, we would finally see a new rally, a new leg of rally. Wish you all the best. Bye.